No mai haere mai, a massive welcome back to my 50 new subscribers and kia ora to the new or unsubscribed viewers watching today. Go ahead, create a YouTube account, follow this guy and turn on the bell for the notifications so you can get more premium content, and also you will have a premium spot in my heart. Today we're going to be discussing how to build your wealth with gold. So things we're going to cover are how gold can help build and protect your wealth, the benefits of gold, the risks associated with gold, and how to buy gold here in Aotearoa. As always, if I leave anything out or forget to turn a stone, go ahead, leave any comments or questions in the section below. Remember, your questions can help others too. So with that being said, let's get into it. So why gold? Today, gold is sought after not only for investment purposes or jewellery. Gold is also used in manufacturing certain types of electronic devices and medicine. Gold should be an important part of a diversified investment portfolio because its price increases in response to events that cause the value of paper investments, such as stocks and bonds, to decline. Although the price of gold can be volatile in the short term, it has always maintained its value over the long term. Here's a chart of the price of gold over the last 10 years in New Zealand dollars. A staggering increase from 1,755 per ounce to 2,855 per ounce, a smart 60% increase. The volatility of gold is shown in the mood swings of this lie detector-like graph, with the end of 2013 seeing a low of $1,476, but like all value investing, it is time in the market, not timing the market. Similar to the access little old New Zealand now has when investing in the US stock exchange, investing in gold has never been easier. This can be in the form of physical gold for you to touch, feel and admire, and in the paper form like stocks or shares. Gold can help you build your wealth the same way cash, property or shares do, by capital growth. Gold has a critical way to protect your wealth too. So let's go over a few pros and cons of gold. The benefits of gold, as mentioned earlier, can help you make money. Secondly is to protect your wealth. The price of gold typically remains strong and in some cases rises during economic events that decrease the value of paper investments like stocks, bonds and cash. Gold has historically outweathered all the shins. No, not those shins. Inflation, deflation, recession, stock market crashes, interest rate cuts, and the infamous dollar. For example, let's say you buy an ounce of gold for 2,900 New Zealand dollars, which is converted at 66 cents, US dollars 1,885. Picture this, GDP numbers plummet, and because of Corona, no, not that Corona, the other Corona that looks like the ball you used to kick around at the warehouse, unemployment rates skyrocket at an all-time high. The government then prints money, inflation, and passes them off as a government supplement to rescue the economy. US dollar weakens and New Zealand dollar follows suit, but at a faster pace, and to buy $1 US it costs 60 cents to the dollar. The price of gold rises as it does not succumb to the childish games of the economy. You still have your shiny ounce of gold that you thought would be the size of your iPhone from the photos, but it's really the size of your home button, but that's not the point. An ounce of gold is still an ounce of gold. The shape, the weight does not change. However, as the dollar weakens, the price of your ounce, no, not that ounce, increases to 2,000 US dollars. At the new exchange rate, that equates to roughly 3,300 New Zealand dollars, a 13% increase with a 6 cents change in US dollars. Now, comparing that fictional example with the most recent crash prior to 2020, we turn to the property market crash in 2008. In under a year, the currency changed by a staggering 30 cents. Whew! Where were we? Finally, gold is liquid, meaning it is somewhat easy to sell or to gain access to, as opposed to an investment like property, which can take longer to sell. Like any investment, there has to be a yin to its yang, so let's discuss the risk associated with gold. Low risk, low reward. The growth of gold historically has a lower return compared to other investments. Ongoing costs. This can be in the form of fees, storage, and insurance. If you're buying a large amount of physical gold, this strongly needs to be considered. Unable to derive an income or compound your asset, as you may do from dividends from a stock or rental income from an investment property. Price volatility. Already mentioned, gold is not seen as a strong short-term investment. The price volatility of gold can be due to supply and demand. Some companies can release more stocks in their company or buy back some stocks, whereas gold is only available from physically mining gold, and you can't just make gold miraculously appear from thin air. Come on. We've reached that part of the video which I'm sure you'll all be waiting for, how to buy gold here in New Zealand. There's physical gold, so gold bars, aka bullion from an authorized dealer, gold coins from collectors, and gold jewelry from retail stores. And then you can indirectly own gold by stock market. Companies that have gold exposure, like mining companies, and gold-themed ETFs. Let's jump over to Sharesies now and type a quick search, gold. Here it will show you all the gold shares or stocks in each of the American and New Zealand Stock Exchange. We've got our very own New Talisman gold mines on the NZX. But as an example, let's check out Barrick Gold, which is the company that Warren Buffett threw a couple of bill down on. Barrick Gold Corp engages in the production and sale of gold and copper, as well as related activities such as exploration and mine development. Keep in mind, the online platforms that you have access to will not show all gold shares or stocks. For example, if we head over to the ASX, there is Van Eck Victor's Gold Miners, which is an ETF on the ASX. BetaShares Gold Miners, which is another ETF. And BetaShares Gold Bullion, another ETF on the ASX. Finally, purchasing gold through apps on your phone. Yep, there's an app for everything these days. The two that I could find which allowed Kiwis to register and buy were SendGold and GoldPass. To test it out, I downloaded the app on my phone, provided my passport and bank account details. Disclosure, make sure anytime you provide your privacy details online that it is an authorized dealer, and this is what the app looks like. First, selecting the info button to find out more about the company running this app, which is the Perth Mint Australia. The Perth Mint's digital product GoldPass has its digital tokens 100% backed by a physical gold stored in our central bank grade vaults, with every ounce guaranteed by the government of Western Australia. Then rattles on about the size of the mining company and their numbers. So already to me this has a crypto feel to it. Yes, you are buying physical gold, or more a certificate to show ownership of a gold locked safely away in the pyramids of Western Australia. Nevertheless, there is a handy chart that allows you to see price ranges from 24 hours to 20 years. Wallet, I selected AUD wallet as I have an Australian bank account, but you can select USD if that is your preference when you sign up. Buy sell gold at their conversion prices shown here. Obviously buying will always be higher than when you are selling, just like when you purchase currency. Selecting bank, allowing you to deposit or withdraw from your wallet. Selecting redeem and then collect physical. Should you prefer to hold your gold outside of the Perth Mint Vault, we offer delivery and collection services. And then they mention cost to deliver is based on the weight, value, destination, and how many cartel you want to help move your weight. I mentioned earlier, in line with the risks associated with gold, is the cost to either hold in their vaults, insurance to ensure it is safe, and delivery fees, all to consider. And then you can redeem the token or electronic version of owning gold, like Bitcoin, which will then be shown here in your certificates. In summary, a few key takeaways from today's video. Diversification. Having a diverse investment portfolio will help you protect your wealth from declining investments. So adding gold to your investment portfolio doesn't sound like such a drastic move. We discuss pros and cons like any investment, understanding or better preparing for the worst to ensure you take full advantage of any investment opportunity. Finally, in the current economic climate and with consumer confidence at an all-time low, gold is a strategic way to help protect your wealth from economic stress. So my friends, I hope you enjoyed today's video. Like my value investing strategy, I have a value education strategy as well. So hopefully I've provided you with a better understanding or perspective around gold. Billionaire investor Ray Dalio has always been an ambassador for gold investing, and the GOAT Warren Buffett has recently dipped his toes into the gold pool, indirectly through a mining company. So where do you stand? Until next time, ka kite anō.